Home prices are up, inflation is down, and the Bank of Canada holding rates is definitely impacting sentiment in March 2024. Also, real estate, as you know it, may change forever. In this Canadian real estate market update, we're going to go over all of these topics and dig into what's actually happening, boots on the ground, so you can make the most educated buying, selling, and investment decisions. If you're new to this channel, welcome. I'm one of the owners of Prime with my amazing wife, Shannon, and our diversified team across Southwestern Ontario, Canada. We cover residential, commercial, and investing. So the interesting thing about that is we don't just give you the stats from a residential perspective. We're able to tell you what's happening across all asset classes in emerging markets as well as primary markets. Let's get right into it. So in March, with no surprise, the Bank of Canada decided to hold the interest rate based off the fact that inflation really hadn't gone anywhere back in February. A few reasons for this is global economic growth slowed in Q4 with US GDP growth slowing, but robust, and euro area growth flat after contraction in Q3. Inflation eased in the US as well as in euro areas. Also, bond yields rose, as did equity markets in January, and global oil prices are slightly higher than assumed in the January NPR. Also, it seems like the employment growth in Canada is slower than the population growth, with signs that wage pressures might be easing, meaning the economy is in modest excess supply. CPI had risen to 2.9 in January, which recently came down to 2.8, but that 2.9% number is one of the reasons why they held rates where they were. Really, with the Bank of Canada wanting to normalize its balance sheet and keeping a balance between all these factors I just mentioned. Now, they keep saying they want to restore price stability, but one of the biggest factors that we keep looking at is the lack of supply. 30 to 40% of new supply came off the market last year, but we are seeing an uptick in interest in construction and builders ramping up new projects. So that's a good sign for the housing market in general. Also, we're seeing builders and investors get creative on adding density, repurposing existing product, and finding ways to add volume to the marketplace. One of the major impacts that we saw on the run up of inflation is it drove a lot of people out of the home buyer market into the rental market, increasing the cost of living, also increasing the inflationary numbers, which makes it very difficult to get inflation under control when you're one of the leading causes of it. Now, we mentioned the inflation number. It dropped to 2.8. There's another rate announcement coming on April 10th. Most people are still expecting it to hold. Last year, and you can check the tape, I said this on video after video, I said expect rate cuts to come at around the June time. And recent reports have indicated that you could see as much as a 100-point drop by 2025. But if you're trying to project where those rate cuts are coming and trying to make your buying, selling, or renting decisions based off that, I would say step back and make sure you're making your decisions on a conservative basis. Your decisions shouldn't be factored on fluctuations on the rates. You should be able to withstand rate increases and decreases and not over leverage yourself. I think it's one of the most important things when you're looking at real estate. Third major topic was the NAR lawsuit in the States. So there's a major decision that's happening in the States where the National Association of Realtors are decoupling the buyer commission from MLS, meaning as a seller, you won't be advertising a cooperating commission as you would have in the past. Now, the interesting thing is, as I've been diving deep in this, talking to leadership all across the States and masterminding is what does this mean for Canadian real estate and organized real estate in general? For us, what it means is the future of real estate is working with somebody who offers more than the ability to just plug you into an MLS system. We've always tried to build a platform that gets 5 to 10 times the reach as your typical MLS system. Our bench and our team of talent are far more than just real estate agents. We have HBA, MBA analysts, we have research divisions, we have a marketing division, we have a production company, a digital media agency. The future of organized real estate is not your mom and pop's real estate agent. It is somebody who brings an insane amount of value, a network, a skill set, and leverage that you can use to succeed in your buying, selling, and investing decisions. I think this is going to force a large amount of agents out of the business. I think you'll see 30 to 40% of agents drop off, which after the 20 to 22 run of agents leaving the business, you're going to be left with the people who actually run a real business, not your part-time real estate agents, not people who are just doing it as a side gig, but getting paid way too much money on transactions that they don't do enough of. You're going to be left with the people who run well-margined business, who treat it like an actual business, and who bring actual value. If you're an agent watching this, I'd encourage you to go become a market expert at your asset class and bring leverage to your clients. Your agent should be able to tell you how they are bringing more to you than they are taking in a transaction. Also, they should be able to quantify how many hours they are putting into your transaction. And if you actually quantify the hours that it would take, say pre-listing, listing, contract to close, and then you netted that out against what you're actually paying your agent, I think you would find that it could be a more reasonable number. And if it's not, maybe you should look at who you're working with. Now, there is an interesting discussion where people think, well, now I just don't have to pay a buyer agent, so I'm just going to pocket that cash. The funny thing about that is the seller that is selling their property is still going to want what their neighbors sold their house for. Also, they're likely going to be offering a marketing fee or still offering a cooperating brokerage fee to entice people to come see their house. Read an article recently that I thought was super interesting, and they said, what would it be like if you wanted to go shopping for houses and you went to that house and realized that that homeowner was charging admission to see their house? Would you go see every single house that was out there? Now, if you're a home seller and you said, I'm going to pay people to come see my house, do you think more people would come see your house? And if you offered that to only the person who actually ended up buying your house, so you could offer money to every single person that came to see your house, but you only paid the person who actually bought it, which option would you choose? And I think as a consumer, a lot of the headlines have been insanely misleading, indicating that commissions are not negotiable. They've always been set at this number. That is absolutely false and not true. All commissions are negotiable, including the listing commission and the cooperating commission. Now let's get into the actual market update stats. We saw a noticeable increase in home sales. The average price was up 3.6% on a national level. If you're part of our insiders newsletter, you can see all the stats broken down by the different areas that we cover. And if you're looking for an agent anywhere in North America or the globe, let us know. We have some of the best networks on the planet. We can get you the stats for your home. January definitely saw a surge in actual sales. Will that continue past May? We'll see. Typically, you see a drop off right after May, and average days on market matters. If it's only 7 days on market and you list your house, you're in good shape. You can just list your house in May and it'll sell in May. But if the average days on market is 38 to 40 days in your area, that may impact the decisions that you're making because you may want to list your house a month or two earlier than that. If they drop rates in June, I wouldn't be surprised if the market rips straight through the summertime. As far as increase in the number of listings people are seeing, the headlines are hilarious saying that inventory is flooding the market. We're back to 2019 numbers. Of course, if you compare listings back to 2020 to 2022 in terms of sales versus what's happening now, those aren't real numbers. Anybody running a real business, compare your numbers to 2019, and we are back to normalized levels in terms of number of listings that are hitting the market. And I'll leave you with this. Data matters, but interpretation of data matters more. If all I'm good for is plugging you into the MLS and telling you what your neighbor's house sold for, you may as well just go do the deal yourself. But if I can bring you value in telling you why that sale happened, having a relationship with the agent, that maybe I get more data than you would have seen just looking on the MLS and how that impacts your home sale and offer strategy when it comes to pricing, marketing, negotiation, maybe I'm a little more valuable than people assumed I was. Something to chew on. And if you got any value from the market update, let me know in the comments. If there's any stats you want me to show or dig into next time, feel free to let me know. We cover this in depth in our insiders newsletter. Click the link below to make sure you join that. And I'll see you on the next one.